go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Japan as well, the Nikkei is up 0.7%. The Shanghai Composite is up 0.5%.
We Indians are here. We are here. He cannot produce what Mahindra can do, what Tata can do.
22,500 and then 22,715 are the next two levels on the way up for the Nifty.
The metal index could be in focus, because you have LME prices that are moved up. So that's possibly the sector of the day, though it's pulled back.
All shorter-term paper will come down. Good times for NBFCs in a bit if this liquidity continues.
Total rent for 5 years would be around 25 crore rupees.
22,500 nearly on the Nifty. That's about 0.6% higher. Much better than for some reason GIFT Nifty was not reflecting it.
It is in the best corporate governance standards that independent committee does the audit of this rather than me or anybody else.
The markets are holding up in the green. We're off from the session highs, but we're also off from the lows.
The oil marketing companies, the oil sensitives, they are the stars of today's trading session.
Well, markets doing absolutely fine, 150 points higher after the initial first 1 hour. A little shaky up and down, but then steady, absolutely steady. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. So second day of greens, it's looking good. We had a bit of a wobble in the morning, but since then, the bulls have taken over.
Well, that's right. And in the final session of trade, so to call it, the final 60 minutes, you will want to go home somewhere around this mark. The bulls will feel good because it's been a very, very good trading session. And keep in mind, the largest constituted, which is the Nifty Bank, hasn't really participated today. But the breadth of the market is super and portfolio is feeling good.
Absolutely. Actually, it's single stocks which are doing well. And there was never any doubt. The Nifty saw that wobble up and down, etc. But the broader market breadth, etc., has remained steady throughout. And I think that is the highlight for the market. Just a few points before we get into it. If you look at what is doing well, you can link it directly back to it. It's very rare it happens like that, but you can link it back directly to, some macro variables. So lower dollar and lower oil providing strong tailwind in that sense. So what is lower dollar doing? It's propelling the metals index higher. The metals index is the top gainer on the as far as the sector is concerned. And it's up 10% from the lows 3 days back, the Nifty Metals Index. The other is oil prices. Brent oil prices under 70, WTI at 65. The oil and gas index, guess what, is up 7.5% from the lows 2 days back. So metals, oil and gas, and of course, then it's CPSC, PSC, PSUs. You've got 3-4 of these PSU type indices. The common thread, of course, is resource stocks, resource names. And that, again, kind of goes back and ties in with what's happening with both the dollar and the oil at this point. So very macro kind of markets is what you have at this stage. Small caps are also doing well. Small cap index itself is up 8% in the last 3 sessions. When I put these numbers out, this is from the lows, not the close, but the lows 3 days back. The two sectors which are underperforming in a market like this are the two sectors where FIIs own the max. One is IT and the other is financials. Look at banks. Look at the Nifty Bank and look at the IT index. These are FII favorites, so used to be at least, and those are not doing anything at all. So it'll be interesting what the flow picture, etc., looks like in the evening today. I just want to wrap up with the number on the Nifty. 22, and these are numbers I put out in the morning as well. 22,500 is the first kind of level to watch out for. We are exactly there, which is 22,513 right now. And then beyond this, you get to 22,715. Then we get to the daily averages. 20 days stands at about 22,800 something. So, that's, of course, some distance away. But it's a pretty good-looking screen with lots of single stocks and a fair bit of volume on the upside. Reema.
Well, just do a quick status check then on the macro indicators. Crude is still at a 3-year low. Brent below $70 per barrel. And the dollar index has cooled off even further. In the morning, it was 104.3. And now, the last time I checked, it was 104.1. Sub that, in fact. on the dollar index. So as the days progress, the dollar index has eased even further. Europe is firmly higher. Remember the DAX, that's the German index, leapt nearly 3% yesterday. It's followed it up with another 1.5% kind of gain. The main focus in the European zone will be the ECB meet, and a 25 basis points rate cut is widely expected. Week to date, the benchmark indices up 1.7, 1.8%. Midcaps are up 3%. Again, metals, PSUs, defense, these have been the stars this week with gains of about 7 to 8%.
Yeah, absolutely. I mean, it's been good going so far, and bulls will hope a lot of that continues. So if we talk about, the gainers, and now it's interesting because it's large cap screen that's looking even better than the mid cap screen, at least as far as today's trading action is concerned. And big gains coming back in. It's very clear that large caps is where the buyers are concentrating today. Asian Paints, Coal India, BPCL. I'm just talking about the top Nifty gainers, and it's cutting across sectoral lines. Like Nigel mentioned, banks are relatively underperforming, but a lot of other parts of the market are up and about. And there's buying even in FMCG names today, which is the interesting aspect. Case in point would be, like we mentioned, Asian Paints, but it's not the only one. Lever itself is up about 2%. And then you have a bit of a commodity play in the form of Coal India, Hindalco, Tata Steel, etc. So it's been looking good. Bank Nifty, relative underperformer. That's the story so far on the screen, and it's been looking good, Nigel.
Well, that's right. And by the end of today, I think what will be the cherry on the cake will be that if the FIs net sell less than, say, 2,000 or less than 2,000 crores odd, because 3 sessions ago, it was around 5,000 crores. 2 sessions ago, it was 4,000 crores. Yesterday is a little south of 3,000 crores. So hopefully that selling intensity comes down. And now you have macros in our favor as well. So that's going to be important. And I'll be interested to see whether or not there is some bout of short covering that's played out. Because the headline index, that's the Nifty, has bounced close to around 500 points. And the FIs are aggressively net short on the index. Element of expiry plays out for the last 55 minutes or thereabouts. Well, Mitesh Thakkar is back with us. Mitesh, yesterday I recall you said that you believe there's more to go on the upside from the time we started seeing a bit of a pullback. How much more to go? Where's the next level of resistance on the Nifty?
So, good afternoon, Nigel. I think 2 things. One, the Nifty has captured that gap which was there on Friday. That low was 22,508, which was Thursday's low, and then we had 22,450 opening on Friday. So that level has been captured. That's positive. There's some mild pivot at 22,600 from retracement levels, but the bigger gap comes in at levels of around 22,700 to about 22,750. If you remember, while we were declining, I think this 22,750, 780 zone had become very prominent for the index. So I think that's the next target area which I'm looking at. Despite the fact that there is a minor pivot at 22,600, I think we have the strength. The way the indicators are shaping up on the hourly to hourly charts, we have the strength to test 22,750 odd zones, give and take a few points in there. So stay long. What traders can now do is possibly trail your stop loss to about 22,445 on the spot, which is roughly about 70 odd points lower from here, 70, 80 points lower from here, and keep looking at upside. Having said that, on the stock side, I have a buy on Bank of Baroda. It was a buy earlier as well, and now can be bought afresh with a stop at 204 for targets of 215. And the other stock is Scan Bank. And I recall, I think you guys were highlighting that the Bank Nifty is underperformed, which is true. But now there's first sign of Bank Nifty reversing as well, which is what we had got in the Nifty yesterday. So there's some hope that the Bank Nifty could play some catch up. And Canara Bank is a buy. It's a conditional buy. I would want to see the stock get past 86.5, 86.80 zone, then buy with a stop at 85 and look for a target in the range of about 90.5 to about 91.
HDFC Bank is trying to break into the green right now. It's managed to recover 1% from the day's low. This week, HDFC Bank, though, has been quite the underperformer, 2.5% lower. But now, as you can see, some buying, steady buying through the day, and it's trying to erase its losses. But let's talk about the big winner today. That's Reliance Industries. Multiple brokerage notes have written on it, bullish ones. Kotak upgrade. Jefferies is talking about a target price in excess of 1,600. Sudarshan is here with the details.
So Reliance Industries is up to more than 2%. It's the biggest Nifty contributor today, and it's on the back of 2 positive brokerage notes. One is from Kotak Institutional Equities, which have upgraded the stock to buy with a target of rupees 1,400 per share, and Jefferies too maintains buy call, and here target is 1,600 per share. Jefferies sees an upside of more than 30%, while Kotak sees an upside of more than 16% from current levels. What does Kotak say? It says after correction, risk reward is now more favorable, and recent underperformance was on back of 2 reasons. First, subdued retail business performance, and second, weak refining outlook. And because of this, Kotak Institutional Equities has cut EBITDA estimate of FY26-27 by 1 to 3%. But despite this cut, it expects an earnings CAGR of 11% over FY24-27. So what are the key catalysts as per Kotak? First, it expects retail business to improve over the next few quarters, and second, Geo platforms listing and likely revision in the tariff, basically likely hike in the tariff, will be the key catalyst. For Jefferies, key catalyst would be store sales growth and area addition should restore 15% growth for retail business in FY26, and as per Jefferies too, tariff hike and likely listing of Geo and improvement in O2C business will be key catalyst for Reliance Industry, and that's the reason you are seeing a big up move in today's trade.
On Geo, though, they are talking about how the tariff hike expectation has now been pushed forward. Earlier, they were hoping for a tariff hike towards the end of this year. Now they're pushing it to March 2026. But then there are so many other triggers driving Reliance higher. But Sudarshan, what about oil marketing companies? Stocks have moved up, 15% in the last couple of days.
So over the last few sessions, especially in last three sessions, all these three companies, IOC, BPCL and HPCL, have been moving higher, and it's on the back of sharp cut in crude that we have seen over the last three sessions. Brent has moved to lowest levels in last 6 months. It's now below $70 per barrel, and it has come after OPEC Plus has decided to increase the output, and basically it has reversed its earlier decision, and due to this you are seeing a sharp downtick in crude, and it's impacting positively to all these OMCs. And another positive trigger is the LPG compensation, which is very likely to come. If you remember, in the budget it was not announced, but after the budget, Oil Minister had come on our channel and very emphatically said that LPG compensation will come. It might come a little later, but it will come. But one key negative that we can say is the Russian crude discount has narrowed if you compare from the last few months. But more than negative, we have positive catalyst going on for oil marketing companies. Now, coming to the valuations, if you look at the valuation, HPCL is currently trading at 1.1 times FY27 price to book value versus historical average of 1 times. BPCL2 is trading at 1.1 times versus average of 1.4, and IOC2 is trading at 0.8 times versus average of 0.9 times. So apart from the positive catalyst, even valuations are suggesting that there is a further room for upside for all these three oil marketing companies.
Thank you very much for that. Reliance Industries is also rebounding from its 52-week low. It had hit a 52-week low earlier this week, 3rd of March, 1156. Devin Choksi is now with us on the show. Devin, you've been a big votary of Reliance Industries, and stock went through a brutal correction. But from here on, do you think the tide is turned and Reliance is attractive?
Yeah, Rima, good afternoon. Well, we have discussed this issue before as well, that the fundamentals of the company definitely, I think, remains absolutely strong, both in consumer-facing business as well as the oil and gas business, I think, portfolios. In each of the verticals within them, also, I think they are relatively more stronger than before. In my viewpoint, I think the Geo platform, particularly with the 60,000 crore annualized EBITDA and 1,20,000 crore worth of top-line revenue, and growing at a steady pace of around 15 to 20% in between, I believe that I think this particular company would probably list at a reasonably high amount of premium as and when it goes into the market, because this is a size that market probably would be asking for from the investment perspective. And taking some of the strong decisions in the retail business, where they have actually, I think, managed to cut down some of the loss-making stores, wind them up, and probably, I think, concentrated, suggests that I think the margins could possibly start showing up a little better with the higher amount of business. So we remain distinctly positive about the growth prospects in each of the businesses, be it consumer verticals or be it industrial verticals in the form of oil to gas businesses.
Okay, all right. So that's a comprehensive take on Reliance. Stock's been holding fairly well today. Devin, hi, good afternoon. Good to have you on. You know, it's after such a long time that one is seeing Asian Paints make a move. I mean, even before the correction started, Asian Paints was obviously in a bear market of its own. Now, is there any reason to look at some of these absolutely beaten down names, even Lever for that matter? I mean, FMCG stocks anyway have been in a different bear market altogether. Is there any reason for specific allocation right now, or do you think that maybe this is just part of overall, I mean, if someone's buying the Nifty overall large caps, then the stocks are bound to get some allocation? How would you look at some of these consumer names?
Yes, I think on the technical side of the market, which is remaining quite oversold, obviously, I think any positive trigger would result into the upside because of the short covering led buying taking place in the market. And that positive trigger that we are talking about particularly is the softening of the crude oil prices. So softening of the crude oil prices would mean that going forward, even the petrochemical prices would come down, which is typically the input source for likes of Asian paint. And that's where you are basically talking about stable to improved margin going forward. Market would factor its possibilities over 1 or 2 quarters in advance to begin with. And in my viewpoint, I think if the oil prices are remaining or promising to remain at a stable level, then possibility of, I think, all the derivatives of the oil would possibly start giving the better advantage to the user industry. And that's where probably one would remain relatively more optimistic than before. Of course, the overall condition in the market is definitely helping prices to stabilize because of the short covering.
Deven, since you brought up the fall in oil prices, I'm glad you did, because that also throws up the other question. Again, I mean, a specific stock selection point of view, what would the best way be to play this drop in oil? And it seems like a fall that's here to stay, given the geopolitical situation. And of course, the US drilling more and more oil. Would it be through some of these FMCG names, or could you just play it directly? Even look at HPCL, BPCL, IOC, all of those stocks, they're also rallying. Would you look at buying those?
So HP, BP, IOC kind of companies, oil marketing, refining companies, I think they may be driven by the near-term momentum that they would get because of the higher advantage that they're getting at the lower cost of oil. But I would remain distinctly more confident about the prospects going forward for the oil-consuming companies, be it metal commodities in a way, or be it, I think, the other companies which we are talking about in paints, or for that matter, even auto ancillaries, wherever I think the influence of lower crude oil into the energy cost, I think is definitely working well. Those kind of companies, to me, I think are appearing better as far as their margin expansion or margin stability is concerned in given situation. So we remain more committed about, I think, staying invested into the companies which are having the consumer outlook, it's strong outlook vis-a-vis, I think, the commodity outlook, which is uncertain in any given situation.
Deven, hold that thought. Let's get to the other big story. RBI late on Wednesday announced another bunch of liquidity boosting measures, include $10 billion of a buy-sell swap and open market purchases of bonds. Meanwhile, the European Commission and Germany has announced plans for higher defense spend and higher deficits, which will weaken the dollar. Lata is here to take us through the details. Lata.
Well, actually, there are too many moving parts actually in the currency market. The biggest bazooka is Europe deciding to spend. Ever since the European Commission was created, they had this big, strict 3% debt ceiling. Now they've broken out of it and said that countries will be allowed to extend, raise the limit by about 1% if it is for debt spending. Separately, they have also said, Germany has said that they're also going to increase their debt spending. And this has resulted in the euro, strengthening a lot, because that will mean so much of spending on, automobiles, warships, etc. And that strengthens the euro because funds flow into European stocks and the dollar weakens. So that's one story that's playing out. It was quite unexpected. And of course, the dollar also became a little weak on fears that this tariff on Canada and Mexico can first weaken the US itself. Now, separate from all this is what's happening in the rupee market. What the Reserve Bank has done is this another 10 billion of FX swaps. What does it basically mean? They announced one already, and they did one on Feb 28. The RBI had sold a lot of dollars, but the actual selling was pushed forward because they sold forward dollars all through October, November, December. So they haven't accumulated some 80 billion of open positions. Now, 20 billion of that over last 2 months, on February 28th and today, they've pushed it 3 years forward. So that's sitting on the head that, the RBI will come in and supply these dollars. That is not there. It's less. But separately as well, what the move does of this FX swaps is it makes forward dollars cheaper. So hedging becomes cheaper. And the expectation on the part of bankers is that a lot of companies will now borrow ECBs because it becomes cheap to hedge them. And that will mean the capital account deficit that we are facing because of FPI capital outflows could get reduced because we will get debt flows. Incidentally, debt flows have been coming. The FPIs are selling equity. In debt, barring January, all other months, they were positive. Now there will be private, corporate debt also coming in. So that pressure on the dollar also goes down. Now, where does all this leave the rupee? Actually, it's still quite ranged. There are enough factors on both sides. Against the dollar and pro the rupee is the fact the dollar itself has weakened. It's now back to DXY is where it was before Trump was elected. Oil is cheaper. That's positive for the rupee. And exporters usually bring in money by March 31st for their own accounts. The Reserve Bank also will not want a very bad ending. That is pro-rupee. Now, anti, of course, is April 2nd is yet to come. And then FPIs have not stopped selling. So those negatives remain. But the mode in the market is that the worst is definitely over for the rupee, simply because now no one is that long dollar. That craze for a long dollar is completely gone out of the market. People won't take speculative positions. Just a word on the OMO. The open market operation to buy 1 lakh crore of bonds was not expected. Some OMO was expected. 1 lakh crore is quite a bazooka. And then this swaps also will bring in another 87,000 crores. So the bond markets are pretty cheerful. There has been a bond sell-off across Europe and US because of this big deficit of Europe. Otherwise, we would have seen a much bigger rally. But positive for banks. It's a mark-to-market gain, for banks. So positive for NBFC and banks.
Lata, I was looking in the bond sell-off is extended in Asia as well.
Yes.
The Australian 10-year is up 10 basis points. Yes. New Zealand is up 8-9 basis points.
And Germany, of course, 25 basis points.
And Japan.
It's like
Japan, 16-year highs for the Japanese bonds.
For the Japanese 10-year.
So, Japan was anyway on a rate hike expectation. EC is cutting rates. The European Central Bank is cutting rates.
They're the only major, economy that's on a raising spree.
Yes.
The data looking strong.
Yeah. But the important point is that our yields would have risen, except for this 1 lakh crore that Reserve Bank has suddenly brought.
And well timed, right? Advanced tax payments.
That's why they have done it, but they've given durable liquidity. Normally for advanced tax, you will give 15-day liquidity. They've given permanent liquidity, when you buy bonds.
But I think absolutely exciting times, right? For those interested in macro markets. I mean, it's like we've had...
Europe is
it's a bazooka. And we've not had that kind of stuff. I think you have to go back...
It's almost as important as the coming together of the European common market.
Let's hope. I mean, all of this has to be passed, as somebody was pointing out. On Monday, I think that meeting will take place. But I think interesting.
Okay, absolutely, Lata. Thank you very much for that. So that's a bit on the macros and what's been happening with the money and the currency markets and how that's interplaying with banks. Actually, let's take that question on the equity side. This bank Nifty slight underperformance that's happening today. But we keep asking this question to a lot of the NBFCs and banks that we get on the channel through the day, that, is their cost of funding going down with all of these liquidity measures? Most of them seem to be indicating that margins should be at least stable now, with the RBI becoming very sensitive to liquidity. Beyond the large banks, in the tier 2 side, when you're looking at either NBFCs or tier 2 banks, what do you like?
The corporate banks, particularly, I think they remain relatively more favorite for me because of the proper mix of the income, which is, I think, coming from the interest as well as from the fees. So that, I think, gives me more confidence. At the same time, I think they're prudent in their expanding their book. So as a result of which, I think you don't run a threat of, I think, creating any large NPAs into the books. So some of the larger NBFCs like Bajaj Finance, I think they remain relatively more stable. Also from the point of view that the consumer activities are relatively happening at a faster pace. And that's where probably I think these companies focus on. They're managing the margins, of course, but at the same time expanding the size of the book systematically. So we like this kind of a proposition, and we believe that I think this is a good opportunity to stay invested in them. And corrective market definitely gives an opportunity to buy further into the portfolios.
Thank you, Deven, for joining in. By the way, markets are building on the strength now. It's a 200-point gain on the Nifty. When we started trade, the Nifty was at 22,500. Now we've added on about 30 points in the last 20 minutes. Titan, TCS, or Bharti Airtel, Bajaj Finance, These are some of the names which are pushing higher and higher. Get into a break. As we do that, parity isn't just a goal, it's a key to unlocking new possibilities. HSBC presents CNBC TV18 Future Female Forward, the Mega Summit co-presented by Cognizant, where we will discuss what it takes to close the gender gap and create long-lasting impact. Tune in to this game-changing dialogue live on CNBC TV18, 10th March, 5:30 p.m. onwards.
Welcome back. Jitendra Gohil is Chief Investment Strategist at Kotak Alternate Managers. Jitendra, good afternoon. Good to have you with us here. It's a good day to have you on, right? Well, 200 points higher now, 22,540 on the index. I mean, as they say, someone was telling me yesterday, with so many stocks recovering and, green on the screen, jaan mein jaan aayi. In many cases, you kind of sort of you're grasping for air and there is suddenly some oxygen. The point is, will the oxygen run out, or this is now looking like perhaps it's a durable kind of setup for some more gains here? Maybe say till about 23,000, maybe a little beyond that, and then we will see. What's your sense, Jitendra?
Hey, hi Prashant. See, few things. One is that market was looking for some kind of a breather, and we have seen that market was already in the oversold category. And now we are seeing since the dollar index has started to weaken. When Trump came to power, I think we were somewhere around 100 in the month of September, and then we saw, the dollar index going as high as 110. Now it has retreated back to 105. Plus, the oil prices have fallen. So I think there's some respite that we have seen for the market, and we feel from a fundamental perspective, the macroeconomic momentum in India has also started to pick up. So pretty much from the Nifty side, we think this is kind of a safe bottom in my view. Our investment committee also believes that from a large cap perspective, the valuation is also very reasonable at around 18.2 times, if I'm not wrong, versus historical average of similar. So net net, I feel that from a large cap perspective, we have seen most of the correction is over, and this is exactly what we mentioned last time when we had our show. So net net, that's what we feel. Second thing that we have to also monitor is what is happening on the global side. So we cannot say that the broader market sell-off is over. We still feel that there's a lot of geopolitical uncertainty, but there are few data points that is very interesting. First is the probability of even the Fed cutting rates is also going higher. So at least three rate cut probability has gone as high as 30 odd percent, which was earlier it was just below 10% or so. So the probability of rate cut in US is going higher because even the tariffs are going to hurt US economy. And if there is a minor slowdown in US economy as well, I think dollar index is going to remain well anchored. It's not going to shoot up from here. Secondly, even Europe is now looking at spending more, right? So if you look at Germany's the kind of comments are coming from the new chancellor is that he wants to increase spending on defense. Hence, the yields are going higher. So when the European yields also starts to move higher, euro actually starts to strengthen against the dollar. So that is also one area that is looking very interesting in our view, that it may lead to some cap in dollar appreciation going forward. The third thing I feel is very interesting is what is happening in China, where not just the monetary side, but also on the fiscal side, Chinese policymakers have now come out and saying that, look, we need to support the economy. So net-net, I feel the equation is changing slowly, pretty precipitous fall for the past 5 months in Indian equities. I think we are looking at some kind of bottom formation. And whether this rally will last for 1,000 points or 2,000 points, that time will say. But fundamental demands that, at least from a large cap perspective, we should find a bottom. And from here onward, one should start, buying large caps going forward.
All right. Hi, Jitendra. Good afternoon. Good to see you. When sounding quite optimistic both on the domestic front with regard to how the economy is shaping up and also on the macros, on the global triggers, because as you're mentioning, you believe that maybe there'll be more rate cuts as well, which will be good news. And in all probability, the RBI as well is going to go ahead and cut for the second time, maybe in the April policy. That said, since we are in a cycle where we expect the RBI to cut rates, I believe you're quite bullish on financials. And within that, I think NBFCs is something that you like. If you could help us out, what are the type of NBFCs? Where do they have exposure that you like? And also pharma is where you're finding some kind of comfort. You don't think Trump's tariffs will be a risk?
Hey, hi. Yeah, so from financials perspective, yes, we like NBFCs. We feel that from a very tight monetary policy, we are seeing liquidity infusion by the RBI. Also, the rate cut possibility is there, at least in the month of April. So net, even the fiscal side also, government has been pretty disciplined in their approach. So we don't see a material spike in yields in India. So net, I think falling yield environment with the liquidity infusion is going to be really beneficial for some of the NBFCs. Now, there are a couple of NBFCs or types of NBFCs that one can look at. One is NBFCs that support consumption. Now, consumption is completely weakened, and we know that how savings rate have come down. But the valuations for some of the NBFCs which cater to the personal loan side, I think those NBFCs are well run. I think the valuation is compelling. And looking at next 12 to 18 months, we are positioning ourselves for some kind of consumption revival. One, because of better monsoon, and two, because there is expectation of the eighth pay commission. Now, it might be implemented, let's say, next year, second half, ahead of the UP election in March 2027. So one way we look at is that if you want to position between 12 to 18 months, this consumption-focused NBFCs are looking pretty good to us, including auto financiers. In the near term, probably auto sector might see some slowdown. Equity market returns have been negligible over the past, and in fact, portfolios are in losses. So there is some wealth effect which might have some rub-off impact on consumption spending. But over the next 12 to 18 months, we think that this weakness should be bought. So we are buying some of the NBFCs which are catering to the auto financing space as well as consumption space. Now, coming to pharma space, I think we are pretty okay with Trump's policy. We don't see the sector to be very much impacted because of tariff. Obviously, we are monitoring this situation. But net-net, we feel that the healthcare costs in US is extremely high, and in terms of our contribution to US, pharma industry, in terms of volume, it might be very large, but in terms of value, we are like, I think around 11th or 12th largest in the world. So I don't see that Indian pharma companies are going to see a lot of problems going ahead. Secondly, on the positive side, if we are able to find some kind of a trade deal with US, and it is expected that Piyush Goyal is in US and there's negotiation going on. I hope that if we can clock some kind of trade deal with US, then it will be a really, really beneficial for pharma companies, as definitely US companies want to diversify their supply chain, do not depend on China so much. So those business opportunities will open up for Indian pharma as well. So I'm not very much worried about pharma sector, and we remain overweight as of now.
Jitendra, hi, good afternoon. Surabhi here. So you folks handle all kinds of alternate assets, right, beyond listed equities. So let me ask you that question. And listed equities have given everybody, goosebumps. It's a wake-up call for everyone that you can't have all your eggs in one basket. So I'm guessing it's a good time for you folks. But tell us, where else is the money going or has been going in the last 2-3 months? Because the thing is, it's all linked. And when the equity market takes such a sharp knock, I'm guessing some of the related spaces like real estate, etc., they also get hit. But what's happening beyond listed equities, whether it's private credit, whether it's real estate, whether it's data centers, and a lot of other stuff, that private credit, of course, that you guys also take a look at and help your clients with?
Subhi, I am authorized to talk only on equities, but if you ask me about asset allocation approach and how we are looking at from the whole investment universe, first of all, our investment committee has taken a view that one should diversify their asset allocation. From that perspective, we are extremely bullish on gold. So we have been recommending to at least have 5 to 7% in gold. Equity I've been mentioning, but since you touched upon on data centers, yes, our team is extremely, extremely positive on the opportunities that India presents. In fact, Kotak Alt is also coming out with some kind of fund here, and we think that this will be a great opportunity, as the kind of data consumption that we see in India is only going to go higher from here onward. So data center funds, that one can look at. Second could be, private equity, where we think activity was little somber, and I feel that looking at the valuation, right now, I think we will find some kind of opportunity. So these are the two spaces where we think going forward one can definitely look at. But last 1 year, the activity has been pretty okay due to excessive valuations.
And good old listed equities, what's a reasonable return that you're telling clients to expect now as they look at a well-balanced portfolio? That whole, the importance of having a balanced portfolio, it's dawning on a lot of people now, I think, after this shake-up. So what, net of tax, 15% still possible?
So, Surabhi, it depends on the kind of risk you are willing to take. So in our annual outlook also, we highlighted that, look, this year returns will be pretty okay, not to the extent that we saw in the past. But absolutely, that doesn't deter us from recommending equities. We have been recommending equities. Stay invested. There's a good macro story going on in India, and hopefully we will not get the kind of returns that we saw in the past, but at least 12% kind of return, which I think pretty much all the wealth fit are recommending. But the surprise element can come in if we see some kind of surprise on the macro front. So here, I think market is right now looking at somewhere 6.5% kind of a GDP growth. But if we really see the kind of development that has happened over the past few years in India, there could be a lot of multiplier effect. And here, I feel that there could be some surprise element in the second half of the year, especially from the RBI, especially from the monetary side. And because the political capital in India is now actually even higher, looking at the kind of election results that we have seen, if the reform momentum starts to gain traction, I think that there could be more surprise on our way. So net, we remain optimistic. We think that this correction is very natural, and one should digest this over a period of time. I think 12 to 15% kind of return is possible if you are invested right. And this dip should be used as a buying opportunity. There are also a lot of pitfalls, and hence we have been continuously recommending our investors to look out for the risk, avoid those risks, and stay invested in equity with a 2-year view.
All right, Jitendra, we'll leave it on that note. Thank you very much for joining in. Good to have your perspective on the show today. And the equity market has definitely come to life yesterday and today, and we're looking at days highs right now, almost 1% up on the Nifty. It's a good-looking screen once again. We do have to take a very quick break on that note, come back on the other side, and then, of course, we'll get you some final trading calls for the day coming up with Mitesh.
It's been the greatest privilege and honor to have represented India for such a long period of time, because wherever I played, the flag was flown. Wherever I played, the anthem was sung. And that feeling can never, ever leave you for the rest of your life. We all felt, traumatized by a loss, And then, of course, when you go out in public, they remind you of it. And they tell you, how could you lose that match? You were leading. You destroyed me and my family. We were watching you till the cows come home. And and only if you worked a little bit harder, you could have won that match. Those kinds of things come at you. And even to this day, 30, 40 years later, people are reminded of matches that were lost. I've lived overseas for 45 years, but I still carry my Indian passport.
You haven't given that up?
No, I'm Indian. And I will always be Indian. It's a feeling that is within me, and it can never go away. Since independence, collectively, we have won less medals than one American athlete. One guy has won more than all of us put together since independence.
Welcome back. Well, the markets continue to hold with good gains. I think a positive today is that Reliance Industries is gradually moving up towards the 1,220 mark, which incidentally is the 20 DMA. Midesh Thakur is back with us. Midesh, good trading session. Keep it going. Keep your long positions going. If yes, how do you trail it? Where their stop loss comes in at, and also fill us in with a couple of new picks.
I think it's the same level. 22,445 remains your trailing stop loss, and 22,750 broadly, I think it's your target area now. And Reliance, in fact, you are highlighting that it's also BTST. Keep a stop below 1,200. Look for a target of around 1,235, 1,240 for tomorrow. And apart from that, I think Hindalco has done well. So I have National Aluminum, which is also improving chart pattern. So BTST here with the stop at about 191 for a target of 196.
Got it. Okay, all right, Mitesh, thanks a lot for that. By the way, the good news right now is that Reliance Industries, it's at the day's high, and we have less than 20 minutes to wind up today's trading session. So that one's going to close in all probability with solid strength and very close to that crucial technical level. Let's move on, though. The rating agencies CARE as well as ICRA, they downgraded Gensol Engineering to default grade on March 3rd as well as on March 4th. We spoke to Mr. Anmol Singh Jaggi, the CMD of the company earlier today. Let's hear out what he had to say on the company's debt obligations, and he tried to clarify on a whole host of issues.
I think if we will be making due good on all our loan, and we will hopefully get a rating upgrade in 3 months. That is what our conversation has happened. That if we service all our debt obligations on track for the next 90 days, we will get an upgrade onto our rating pack. And we are 100% committed to doing it. Once we do that, and once we get a rating upgrade, we will get access to further more working capital, which is there. The obligation that we have on a monthly basis is about close to 20 crore rupees a month, and approximate I'm saying. So there is about 20 crores a month that we have, which means that we will need about 60 crore rupees in the next 90 days to keep all our obligations on track. And I think the current money that we have and the money that we will get from our customers, plus the promoter equity infusion that we will do, we will be able to ensure that we are able to pay the 60 crores on time. With the payment of approximately 60 crores, this number, with the payment of this number, with the payment of all loan obligations on time, the rating agency after 90 days will review our case again, and hopefully with the positive thing that there is no due obligation, we should be able to get a rating upgrade. At least not, I'm not saying that we will go to some BBB or something like that, but it will at least not be in the D category.
And D category is a problem because they are shut out from any sort of funding markets, any financing in that sense now. Unless there is a rating upgrade, institutional funding is out of bounds, out of reach. And that, of course, is a big problem for a company like Gensol. My colleagues Nigel and Mangalam also asked them about Blue Smart. Actually, each of these companies is essentially has seen lots of large investors come in. Blue Smart, for one, of course, which has recently raised another round. The management, of course, said what they could. Mr. Jaggi essentially saying that business is good and business is running fast, but they need to get out of this mess the quickest possible. 3 months, rating agencies give it another look and decide whether they want to pull this out of the D bucket, the default bucket. So lockdown one way, 335 as we speak. Now, let's talk about the other big story, which is US-India tariffs and where they will finally settle. Sources tell CNBC-TV18 that the government in the US has sought zero tariffs on almost all products traded between India and US. Parikshit is here with more. Parikshit.
Yes, this indeed is an important development. US and India have initiated formal talks on a trade agreement this week. And we believe that US has started the talks by seeking zero tariffs across product lines, except for the agricultural sector. Remember, Donald Trump has also said that he will be imposing tariffs on agricultural imports into the United States. For the moment, they're saying that there has to be a zero tariff policy between India and US. And this would, of course, apply to cars like Tesla and the automobile sector as well. What is India going to do? India has offered greater market access for US industrial goods into India. They've also sought greater access for Indian MSME products made by high labor-intensive sectors in India. But these are the first round of talks that have taken place. Both sides will now go back and deliberate on the proposals. India is going to think about these proposals, but definitely there would be concerns about a zero tariff policy. Reciprocal tariffs, that threat, of course, looms large. And India would be hoping to strike some sort of deal with the US. But for the moment, any kind of carve-out for India looks difficult.
Thank you. That's an important story. We'll keep tracking. We'll get into a break. As we do that, here is some good news for all our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. So don't wait any longer. Download the CNBC TV18 app from the Apple Store or Google Play Store, or you could just scan the QR code on your screen.
Welcome back. Well, the markets actually are holding with solid gains. The Nifty is going to go home with a double century, 200 points. And I'll tell you what, we've taken off at least the first level of resistance, which was at around 22,450 to around 22,500. Just in the last few minutes, though, Britannia has come off the top. I think one of their senior executives, had resigned. I think that's what's caused the stock to get a little bit nervous. So that's moved to the low point of the day. Amrish Palika is with us. So Amrish, before we get to a stock-specific action, you normally bring a stock that you would like to advise our investors to have a look at. Which one is that?
Nigel, that stock is Sona BLW, which is a leading automotive technologies play which designs, develops, manufactures highly engineered automotive systems and components. They have 74 OEM customers across India, Europe, US, and China in both electrified as well as non-electrified powertrains. About 11 state-of-the-art facilities across India, US, Mexico, and China. 39% of the contribution comes from EV supplies, 20% comes from hybrid. So basically, it is future-ready, de-risk model. Recently, they acquired Escort's Kubota Railway Equipment Division, which is a leader in railway brake systems. So this is a decent diversification which they got into. Q3 revenues were up about 12%, PAT grew by about 17%, EBITDA margins were very steady at 26%. And they have a very strong order book position of about 23,200 crores, of which EV-related orders itself is about 76%. It's among the fastest growing auto ancillary companies. Expected PAT CAGR over the next 3 years is about 25%. And like I said, it's already diversified. So FY26 expected EPS is about 12, and my target here is 624.
Okay, so Sona BLW would be your pick, Amrish. Got it. Good afternoon and good to have you on the show. I'm just taking a shot at this. I don't know if you've had a look at Castrol any time in the recent past, Amrish, because not just Castrol, even Gulf Oil. I mean, earlier these companies came out with decent numbers in the third quarter, so the stocks are going higher. And now there's another trigger, obviously a much bigger trigger, with perhaps a global deal in the works, Aramco perhaps looking to buy globally, the lubricants business from BP, which could include the India business, which is, of course, Castrol India. Any thoughts on these stocks, lubricant stocks?
That is clearly one of the triggers which has, I think, improved the sentiment in this stock. And I think the other trigger is that the oil prices are coming down, which is positive for that because clearly that increases the margins. But I think the bigger trigger is a possible takeover. Okay, so,
but would you take a view, anything that's lubricants? You mentioned Sona BLW. So overall on auto, are you looking out for more interesting names? But also there's the issue of how much exposure maybe these companies have to the US with the whole tariff uncertainty.
No, see, the issue would be there with some of the auto ancillaries, but someone like a Sona BLW will not have that issue because they also have operations in US. So they really may not get too affected. Someone like a Tata Motors, because of JLR, could get affected to a certain extent. But again, we have seen a very decent correction in Tata Motors. So at these levels, taking into account these risks, I think is decently priced. So in fact, I was suggesting people to buy Tata Motors when it come closer to 600, even at 639, 640. I think it's a decent long-term buy. So at these levels, if you see across auto or auto ancillaries, I think most of the risks are already priced in, and the valuations are decent.
Amrish, PVR Inox is also bouncing after getting beaten down. It's 45% lower from its 52-week high. And investors are enthused by the collections of this movie Chava. Right. Is it attractive, a stock like PVR Inox?
I've never liked that stock, especially in the last 2 to 3 years, because it is completely dependent on how well a specific movie does or not. And you really can't have a long-term visibility. And looking at the sort of performance which you have seen from most of the movies which have got released, I think, because of which we have seen underperformance from PVR, and I think that's going to continue. So any sort of a move like this, because of a blockbuster release, should be utilized by people to at least reduce their positions.
Okay, all right. Amrish, stay with us. I'm just going to come back to you, but let me wrap up things here. We end above the 22,500 mark, and it's a very good close. The bank Nifty also picked up actually a little bit, but not too much. So I think at 2:30 we were at about 48,640, and we were at about 48,630. Nothing actually in the last hour or so. It looked like there was a bit of a pickup, but that fizzled out. So it's underperformed. actually the two indices which have underperformed are the banks and the IT indices. So we'll be interested to see if what foreigners have done today. because markets have been, and these are the two sectors where ownership of FIIs is some of the largest. But Nifty, of course, no problems. Two sectors which did the best on the other side, metals. So 2.5% here, 10% on the Nifty Metals Index from the lows 3 days back. And the other is the oil and gas index.